Finance media darling Cathie Wood recently went on CNBC for an interview to discuss the recent downturn in her funds. The CEO of Ark Investment Management had a lot of interesting points to make, giving investors a sense of relief after a strong downturn in her massively successful funds that have returned insane percentages in the last year. In today's video, we analyze the interview and answer the all-important question: should you invest into Ark funds or is it too late? And we ended with Cathie's pick for her 2021 Stock of the Year. Ark Investments is most famous for investing in what Cathie calls disruptive technologies. If you take a look at the list of ETFs offered by the firm, you will see the famous Ark Disruptive Innovation Fund, Next Gen Internet, Genomic Revolution, Anonymous Tech, and more innovation-based strategies that look to profit off disruptive inventions. So far, her strategy has worked. Her bet on Tesla, of which she holds 3.5 million shares, worth over $2.4 billion, was considered crazy in the early days, but her intuition has paid off, making her one of the most famous fund managers in the world. In recent weeks, however, her funds have taken a massive hit. The famous ARKK went from $152 a share in February to just over $100 in early March. This has shaken many of her investors, and CNBC starts the interview off with exactly this topic. Here is the clip.
It's been amazing to watch your rise and your funds rise over the last year, and yet the past few weeks have been absolutely brutal. The Ark Innovation ETF down 31% from the recent highs. How concerned are you about these rising interest rates and what that's doing to a lot of your high growth companies and the questions about valuations?
Sure. Well, we've been struck that the market never priced in 0.5, 1, or 1.5% interest rates. We think the market never believed interest rates would stay down here. And so it over time, we believe, has used sort of a normalized 3 to 5%. So we don't think that is why the market is correcting here. We do think the speed of the increase in interest rates is scaring people. It became very comfortable in a low interest rate environment, nothing much changing, the Fed has our back and so forth, to become involved with the market. And I think this has shaken the bull market was broadening out to incorporate value or more cyclical sectors. And I thought that was going to be very good news for our strategy longer run. The worst thing that could have happened to us was another tech and telecom type bubble where the market narrowed so that only a few groups won. Right now, the market is broadening out, and we think in an underlying sense, the bull market is strengthening, and that will play to our benefit over the longer term.
As you can see, Cathie is confident that the market never really expected interest rates to be this low for this long. She claims that it's an overreaction to something that was to be expected. Interest rates rising slightly, in her opinion, isn't going to move the needle and affect these high-growth companies. We still have a long way to go before interest rates make a concrete impact and go above the 3 to 5% range, which was previously considered low. Instead, it's her opinion that it's only the speed of the rise that is scaring off the markets. She also states that the reason for the drop in her fund specifically is that the bull market is, quote, broadening out. What she means by this is that investors are now buying up traditional value stocks that were laggers in the coronavirus. This is why we're seeing traditional value sectors like financials rise. In her opinion, this is actually a good thing and a sign of a stronger bull run to come. She warns that the worst thing for Ark is to see bubble-like behavior in a specific basket of stocks. Even though her fund would temporarily benefit from this sort of action, in the long run, it will be catastrophic once the bubble pops. The interview continues with more talk about interest rates and the rotation into value, with Cathie reassuring the anchor that this slight downturn is temporary and is actually a good sign for the long-term success of her funds. When asked about specific names she's excited about other than Tesla, she answers with the following.
We could go through a number of stocks that you like and that are all high interest on the street, from Palantir to Square. Why don't you give us, besides Tesla, which we know you're a big fan of and your conviction has increased there, which one you think is the most underappreciated name right now in your portfolio that you'd be looking to add positions to?
Well, we just went through this morning. Invitae in the molecular diagnostic space is probably one of the most important companies in the genomic revolution, and it is getting hammered. It's a company that has had historically small cash cushions, although they've rectified that with offerings, which is great. But it's investing aggressively to be the leader in the molecular diagnostic testing space. Many people, the disconnect for many people here is when they think of lab tests, they think of LabCorp and Quest Diagnostics, which are effectively very mature companies, commoditized, value stocks. And so it is a little bit like Tesla in the automobile industry. The new lab tests, which are going to be informed by artificial intelligence and big data and supercomputing power, are, we believe, in a winner-take-most market as we move into personalized medicine.
This is her next darling, Invitae Corporation, operating as a genetic information business. What this company does right now is rather incredible and will 100% be more and more popular as healthcare becomes more and more personalized. If you head over to their website right now, you can see the 5 tests they currently offer. For example, they have the carrier test, which looks at over 288 genes to check if you're a carrier of a genetic disorder that can be passed to your child before or during pregnancy. Or the cancer screen, which assesses 61 genes to look at your risk of developing an inherited form of cancer. These tests will provide individuals the proper, necessary information to treat and prevent diseases before they happen or before they're passed down. Right now, the company is beat down after a troubling past few months. Here is the CEO, Sean George, talking about the company's strong points.
It really comes down to what question is being asked. If it's about your health, if it's about the health of for yourself looking forward or for your children or for your family, Invitae is providing the answers. Invitae is bringing the same genetic information that the world's experts across all disease areas, all stages of life are relying on. Indeed, we are becoming the #1 brand with these key opinion leaders and experts. We are the one providing this information. We are the company to go to.
So you are specifically looking to take DNA information, not necessarily to tell me where I'm from or where my ancestors were from, but to help me understand my own genes and the health issues or attributes that I may have. Is that the difference?
That's right. Given how fundamentally important genetic information is to healthcare, I'll throw out a statistic. Probably up to 20% of individuals in the population's primary issues with health have genetic underpinnings. That means 20% of the population, the outcomes, decisions, the costs associated with healthcare are driven by genetics. This information is too important to be ration care in healthcare as it has historically. In Invitae, over the last 9 years, Invitae has invested heavily to solve that problem. Accessibility being the other major issue, cost, accessibility. And now here coming up in Q2, we'll make this available in a patient-initiated format to get the same high-quality tests the world's leading experts rely on into the hands of as many people that need it.
Thank you guys for watching, and please make sure you hit that subscribe button if you enjoyed. Also, if you want to support the channel, please consider buying some merchandise listed directly underneath this video.